Good morning, everyone. Welcome to the Euro Trade. I'm your host, Market Stalker D. If you're new here, just randomly stumbled across the stream, welcome. I'm a commodities trader, not really an equities trader. So you will see me covering things like gold, copper, gasoline futures, crude oil futures, and similar products. I have been trading for 18 years. 12 years out of that, I've traded for various prop firms. And while I am Series 3 qualified, I'm not a CTA. So make sure to familiarize yourself with the risk disclosure that our moderator Bruno has posted nicely in the chart. Sorry, in the chat. Still waking up. So first things first, we're gonna review that RBOB trade that I did yesterday. So eventually it did what it needed to do, and like I said on the stream yesterday, it was a little bit too early for that mean reversion. But as we kind of got closer to the NYMEX pre-market, we finally started to see that reversal and the ultimate smash of the value high area with a prompt reversal. Yet again, that is very typical for the energies markets. They're very double-sided instruments, which is why I think a lot of equities traders find them very, very challenging to trade. But yeah, so I'm on a combine because I'm visiting my mom in Serbia, and this is not an approved country, so I cannot trade my live account on Topstep whilst I'm here. But yeah, so it says 7 trades because I scaled in and out, but it was just 1 trade effectively, maybe 2. Yeah. Same thing, same idea, short RBOB, to value high as the first point of taking profits. And if it had continued, well, actually, if crude oil had accepted value and continued, maybe I would have held that longer, but that didn't happen. It literally hit it nearly to the tick. So yesterday's crude oil NYMEX value was sitting at 61.80, and I use crude oil levels, but I use RBOB or heating oil to express my positions. So yeah, today we're going to have a look at the gold developments because I think it's in a bit of a precarious situation. So what I'm going to do here, I'm going to take the crude oil chart, make it bigger, and then we're going to go to gold and see where the levels are because I haven't looked at them just yet. This was all from yesterday, so let's see where today's levels are. Okay, so Asia high, not too far. And then Asia low is right here, around 40.19. So that's usually the first thing that I do on gold. I don't do this on energies markets because Asia, on a lot of the days, it doesn't really trade that often. And the way I work, it's all within the statistical relevance and how often we see things happening, right? So if something doesn't really trade much during the actual Asia session, then the Asia session is just not that relevant. It's an out of hours market for that particular product. But gold, very lively for Asia. And then we usually get a bit of a dead period for the next sort of hour and a half. And then we get closer to the London Metal Exchange, then we get COMEX, and then everything goes a little bit nuts, providing a lot more opportunities. But we can take this time to actually see what's happening and prepare for the day and get those plans in order so that we know what we're doing. So first things first, daily chart, still very bullish, right? We did have a bit of a selling wick. I don't think it's that relevant though, because the way I look at the composition of the chart on the daily, because it's such a large time frame and there's so much trading information. So you can look at the overall composition of the candle, and if the selling wick is larger than about 40–50% of the candle, that becomes relevant for me. And every time that's happened in the past, you can see that we get the next day that tries to go lower, but this is gold. It's kind of like a meme coin at this point. And the sell button tends to be not working very much, and if it is, it's pretty painful. So we'll see whether the intraday time frames agree with that, because for now we're from just like an overall preliminary look, we are actually below the COMEX value, and that could be significant for today. The next thing that I want to see is where the value areas are located on gold. That is a market profile concept. It's basically a fancy way of saying the distribution curve from the previous day's trading. And as you know, if we are inside the distribution curve, that tends to open up the possibility of a more balanced day. So I would be switching to more range-bound strategies rather than looking for my big trades that give me like 200 ticks and stuff. But yeah, for now, it's just teasing the COMEX value low, and I'm going to put those on the chart. So COMEX value low currently sitting at 40.58. I like to put my value areas in kind of light purple, just to delineate them from some of the other things. Now, I'm guessing this is probably not going to be ADR high. It was yesterday where Asia high and ADR high were all in the same spot. Just going to change that. And then COMEX value high is at 40.72.4. Just going to do the coordinates because it's easier. Change the color. Obviously, I have a different charting platform where I have all of this spewed out for me automatically. Why do people say two cons? I don't really get that, right? We used to say lots or cars or contracts, but two cons, it just sounds so bad. It's like, I'm in two cons. Why cons? I know that it's short for contract, but like, don't you think we already have like enough negative connotations with con, scam, this and that? Isn't it just better to stick to lots? Or am I just being Granny D? I don't know. But yeah, it just never, it doesn't sound good to me. All right, let's have a look at where the quantitative extremes are located. We have one for gold that is just above the value area. So which was that? That is the ADR high, literally right above value high. So it is in, why can I hear myself? What is going on? I can literally hear myself. Where do I hear myself from? That's weird. I don't know. Let's switch that off. It's confusing me. Yeah, so ADR high, quantitative extreme. Currently sitting up, let's get the right number here, 73.8. So yeah, literally within a few ticks higher, 73.8. So what I'm going to do here, actually, I'm going to say COMEX value high. Did I just put another line there? I did. Okay. So COMEX value high / ADR high. Why is this relevant? It's because it represents the norm of how much on average this product moves in a 24-hour period. So I have a way of doing these projections dynamically. So it's not just like a static line where it's like, oh, Globex opens, let's put ADR high, ADR low, and that's it. It actually tracks the day's high and low as the day progresses. So they can move a little bit until one side is exceeded. Does that make sense? And that means if you're looking for some mad momentum move, whilst we're coming up to the ADR high and you want to go along with it, Yeah, it might work on some days, especially in markets with a very strong uptrend. But on most days, it's going to be at least a slowdown, if not a complete reversal from that point. So I actually use it twofold. One is to figure out if we're in a normal day where we expect the range for the day to be respected, or if it's an outlier day, like every time you have, for example, big releases, FOMC rate decision, NFP, CPI, PPI, anything that can really move the markets and change some of the underlying perceptions of the macro picture, that can bring the outlier day into the mix. Usually you will already see the outlier day happening pretty early. So what you would expect in that situation, let's say you have a hypothesis that gold is going to keep going. That can be one hypo, right? And in that respect, you'll be looking for the price to go above the ADR high without any wicks, because every time you have a wick, that's more likely to be some sort of a liquidity grab. We used to call them stop, run, and reverse. And it's a very well-known market maker play that a lot of people get stuck into. But yeah. Okay. Daniel says, I hope your vacations are extended. It's not really a vacation. I mean, I look at this as just like a change of scenery a little bit. It was my mom's birthday on Tuesday, and I do try and get over here every sort of 4 months or so to see her. We have power here. It's not, and internet. Sugar. But yeah, it's just in England where I am, because we live out in the sticks. Every so often they're upgrading the new basically what's happened, there's so many new builds, and now everybody's got flat screen TVs, sometimes multiple. They have internet, they have a whole bunch of stuff that is overloading their very old infrastructure, and every so often they do a power cut, right? So this is why I was thinking of getting like a generator for the days when they do a power cut. But yeah, whilst I'm over here, I have my travel laptop with my 2 flip-out screens. You guys saw my Twitter a few weeks ago where I showed how it looks. And maybe at some point they can figure out a way to power up the screens with less wires, because at the moment, whenever I'm plugging everything in with my 4 screens, I have Asus Duo, so I have 2 screens already, and then 2 flip-out screens that are add-ons. It all just looks like some sort of a medical procedure with these wires sticking out everywhere. So yeah, hoping they will improve that in the next few years. But for now, it is what it is. So yeah, I like my 4 screens. I tried doing it with 2. It's just not enough, because obviously I look at multiple products, I look at the options chain, I look at Bookmap, then I've got the stream, and then I've got OBS, I've got Discord, I've got so many things, and you just can't jam everything into 2 screens without just flipping back and forth annoyingly. All right, so let's have a look at the ADR low as well, so that we know where the projections are to the downside. ADR low located at 4,007.5. So a little bit below the Asia overnight. Oh, am I going to sneeze? Don't want to sneeze. $4.7. No, 7.5. What am I doing? 7.5. Wake up, G. Wake up. 7.5. I'm going to change this to the green line just to delineate the area and to make it more obvious when we get down there. If we ever do get all the way down to 4,007, I mean, to me, that would definitely be continuation longs for a swing type trade intraday. Not like multiple days, obviously we're all intraday futures traders, but yeah, once we're down to, close to that 4K, I would definitely be looking to swipe some longs and then hold them until the cows come home. But for now, it's a little bit too high up. We do have a couple of options levels of interest literally coming up at 40.60. So why 40.60? Well, a couple of reasons. Looking at where the options open interest is located, GEX2 is right at 40.60. Now, whenever I look at the overall gamma environment for gold, it says it's in positive gamma. Now, obviously that can change. There's gamma flows intraday that can put a wrench in the works. But generally, when you have a positive gamma, you would expect GEX 2 and 3 to act more as stabilizers. And you can argue that that's already happened pre-market, right when Tokyo closed. Then they have the typical Tokyo reversal after the close, so fade after settlement. For now, it's still being very supportive when it comes to VWAP. This is my Globex VWAP. If you want to know my settings, here they are. So I do change it to be open, high, low, close divided by 4 rather than open, high, low divided by 3. So I want the full average of all of the data points. I find that they're a little bit more accurate than the other one. But yeah, for now, we're just teasing 40.60. We're sitting in and around the COMEX value area, and we just need to be patient and wait for the right setup. I'm not a scalper. I think scalping is very laborious, so a lot of trades for not that much cash, and I consider myself a bit of a lazy trader. So if I can find one setup, that's like great. If it's more of a range day, I will trade more. And that's when you will see me do about 5 or 6 setups on the day. Whether it's all on the same product, that's a different matter. But gold generally likes normal and normal variation days when it comes to day types, which means that we have the first hour of trading, and then it extends that range, and then extends it by the size of the first hour, or twice the size. That's what the day types refer to. How are we trading around that first hour? Is it extending to one side or both sides, which is more neutral day type? So opening up the possibility of more range-bound strategies already immediately. As soon as you see something opening inside value, you should just kind of be a little bit suspicious. You know, if you're looking for a trending move and we're inside value, it's like, well, is this a change in sentiment? You know, that inquisitive nature should immediately take over. Let's have a look at copper. Copper has a bit of an interesting development still on that very high time frame, so weekly time frame. So just to remind you all. Let me get rid of these drawings intraday. So we had this happening, right? It's still trying to take out this big candle. I consider this a weak structure. I don't see it as a viable area to keep selling against, but rather to buy against it, right? Why? Because every time something smashes down so quickly and then doesn't have a second candle follow through, that implies that this is a weak structure, even though, you know, it looked horrendous on the day. It was due to the tariffs, and you know, whether it was a fat finger or a genuine offload of certain positions at the time, we'll never know, and we don't need to. But the gist of it is that we still have some supply worries on copper, and there's so much news coming out. Now, copper is not super volatile at these during this particular time period. But it's sort of moving, you know, there's a lot of, quite a few people who are interested in going long copper. Everybody wants to see it higher because of those supply worries, and technicals kind of support that. So I don't necessarily want to fight that. Any pullbacks that I see, unless it's an obvious change in sentiment, I would still be looking for any pullbacks to be opportunities for further buy. even intraday. So let's have a look at the levels. First thing, finding the overnight high, just like in gold, because it's a metal as well, so they get traded quite a lot during Asia. So this is probably going to be somewhere higher. So overnight high, for now, it's here. This could change as we get to the London Metal Exchange time, which is not going to be for another couple of hours. But yeah, it's still looking like Asia is still buying copper. So maybe a pullback somewhere. In a trending market, VWAP can be a very good pullback area. And the overnight low is down here. Okay. Let's have a look. Joe Sam says, Deeyana, is it fair to say gold futures usually gets decent action around the Euro Open? No, quite the opposite. I would say that London Open is a bit of a snooze fest on gold it's kind of a dead period. Look, some days nothing is 100%, right? So some days, yes, we do get, decent price action. How often does that happen? In trading, you need to weigh the pros and cons, like the frequency of an event throughout a bigger sample size. So how many times do you see gold continuing the trend or reversing and then continuing that reversal in the first 2-3 hours of actual London session? Not often, right? And we can actually go in and have a look at that. You don't have to take my word for it. But let's say 9:30. So yesterday, let's look at the open. Here it is. So London Open. So Asia, very active. London Open official. But remember that London Open is not really a thing for the metals. It's the London Metal Exchange that really starts the party. And then COMEX comes in with the ton of volume and they continue either a reversal or continuation at that point. And a lot of the days it will be the reversal. But if you look at how the price action gets messy in those first 3 hours, and they really kind of make a decision again where they're going to go later on. And then if we go back, so here's a day when we did have a very good price action, and we were here for that. But here's another one. So here we go. London Open, flat as a pancake, right? Not going anywhere. And only once we get closer to LME and COMEX, it actually starts moving back up. Here it is again. So 9:30, flat, right? Nothing. This is a 30-minute chart. So how many hours did this consolidate? This is the end of Asia, right? So we have 1, 2, 3, 4, 5. 5.5 hours. It does absolutely F all. And then suddenly it's like, oh yeah, actually, let's trade it again. And that's because the metals are not really widely traded for the London session. The idea with these, most of you who have been here, already. But the idea for these streams was supposed to be DAX trading, not really metals. And that didn't really work out because we don't have DAX yet in Topstep. We will someday, but at the moment we don't. So it is what it is. Here it is again, end of Asia. So Asia goes into a nice downtrend. Not the biggest day, but still. London, chop, 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 chop. And really only, this is like already LME. LME kind of goes into a trend. And if we go further back, here we go again. It looks great, right? It's like, oh, we're pushing. And then London comes, and it's like 30 minutes, 60 minutes, 90 minutes, 120. It's just not moving. And then it only starts moving as we get to LME. It's a pattern. So to say that, oh, gold generally has great price action for London Open, it doesn't. It really doesn't. And if you go back to look at the entire year, you will see that more often than not, it's like watching paint dry. for this time of the day. But we can use it, like I said, you can use it to observe the market, get a feel for it. You know, what did Asia do? Get your levels in order if you're awake. And then have a very good plan going into more relevant exchanges for this particular product, you know. And that's the case for most metals. So it's like a dead zone before it begins. DAX really, you know, DAX and FTSE are the ones that are the most appropriate products for this time of the day. But we don't have them, so, you know. Daniel says, more screens, more wins. Well, I think for me, it's more a matter of just doing a whole bunch of stuff and then just, you know, getting the screen real estate to accommodate your needs. You know, we're all different. Like if you don't stream, if you don't run, you know, 2 different companies, if you don't have a team from Topstep that's talking to you, if you don't do, you know, meetings and stuff, yeah, you probably don't need more than 2. I certainly wouldn't. But there's a lot of things happening. Yeah, so it's not about the wins. Jeremiah says, I'm from South Africa. We frequently get power cuts. It makes the soul resilient. Over here, often we use solar power, inverters, and power stations. Have you found a way around the outages? Look, they're not that frequent. Like since I moved into the new house, which was in May, sort of beginning of May, we've only had like 3. And they're not like super frequent. It was like one of them was because of a storm. The second one was a planned one. And then the third one was just a random storm again, because we had that storm Elise or whatever it was called. So that they said that some of the trees went into the cables and they sort of messed with that. And I'm like, okay. And then they were like, well, we're going to have another planned power cut. But, you know, it's not super frequent, but it just gets a little bit annoying when they go the previous day, you know, you get a text and it's like, there's going to be a power cut tomorrow, right in the middle when I'm supposed to be doing the stream. So I want to make sure that that's not the case. And yeah, I'm looking into some kind of a generator. I don't think solar works very well in the UK because there's not enough sun. Like you would have to have some ultra super strong things to actually gather solar energy in the UK. Eddie says, I bought GC at VWAP, took 3 micros out right now and let the rest run to stop at break even. Do you think that's a good trade? Yeah, I think that's an excellent trade. So well done. You know, I am usually not awake at that time, but yeah, excellent trade. It is a very strong uptrend. So anytime you see a reversal at VWAP, you know, obviously not high on hopium, right? Going, oh, is it going to reverse? But you have to watch price action, presumably, right? And then if you see any sort of signs of strong buyers stepping in, and you can see them, I mean, on time and sales and on bookmap, they're very obvious, right? You get the increase in volume, you get the big bubbles coming in. And yeah, and then it just rejects VWAP and carries on higher. It's fine. It's a great trade. Somebody's saying, you're my liquidity. Well, really? Because yesterday I swiped the RBOB trade nicely. So, were you trading RBOB at all yesterday? No? Random comments today from people I've never seen in here before. So, yeah. Right, let's have a look at, what should we look at? Maybe natural gas, actually. Let's have a look at what's happening in natural gas, because I'm actually interested to see whether we are still in that fierce downtrend. Just from a little basic look here, it looks like the answer to that is yes. So let's recycle this. Oh, these are old levels, but I see that they're still visible. So since I haven't looked at this particular product in a few days since I've been here, I want to start with a clean slate. So anytime you have like old levels, they can sometimes cause you to go into a weird bias. But first things first, weekly chart. Still sitting in that same attempted reversal area. But no, not much traction to the upside. Still this demand here. Are we in a cold enough weather in the Midwest for the natural gas to kick up in volume? Probably not. I think we're having a bit more of a warmer weather. And naturally that means the demand, the demand, actual physical demand for natural gas is not here yet. So unless anything changes there, I would still be looking for any rallies to sell in natural gas if I can. Not now, it's a bit early. I trade natural gas for NYMEX time period. Even the daily attempted to go higher, consolidated, very flat on the this is I think a 16 EMA. Yeah, so no perceivable trend on the larger time frame at all. It's literally just gone very flat. 4-hour chart. Again, a localized support here, but wouldn't want to trade against that because we have all this space down below it. The only idea there is that we do have a low volume node on the volume profile. In and around there, they can be like good reversal points intraday, but nothing like a big swing. So even if I do find a trade there, I think I'm just going to grab like 30 to 35 ticks and be out. Yeah, so Brent Young says still wearing shorts in the Midwest here. Lol. Yeah, so that's another reason not to do anything on some like longer time frame natural gas. Because there's just no demand for it. Like until the very cold weather comes in, they're not going to be stockpiling natural gas because it costs money, right? There's insurance, there's exposing yourself to interest on the goods that you already have. There's storage fees. So yeah, the shorting natural gas is a kind of just an overall view might be what we want to do. The behavior the natural gas has, it's kind of similar to crude oil. They are very different. They're not really connected. You know, the connection between RBOB heating oil and crude oil comes from the fact that crude oil is a raw material and then they make the other two from it. So it's a very, very close connection. But natural gas is kind of its own thing. And yeah, maybe some days they'll be correlated, but for the most part, they're not. It's like its own entity. And yeah, let's have a look at natural gas levels. Not unusual to have London session being super far away from NYMEX. And yesterday there was a very nice rejection of the value area for NYMEX. So they started to reverse it pre-market. Again, this similar to RBOB, right? So pre-market reversal. But there was a little bit of a different view because it was inside value. And because of the bearish nature, I probably would have waited if I was looking at it until we created some single prints on the profile. And that wouldn't have really happened until down here. Whenever I see inside days, even if there's a value rejection, I want to make sure that it's not the responsive activity trade where they push it outside of value and then market makers basically hedge against any sell-offs, because that's what they're supposed to do, to keep their delta neutral state. But yeah, in this on this chart, the initial bounce extension with some single prints left behind, that would have been kind of my entry. And then you could have just held it for nothing. It just carried on all the way to New York lunchtime. and then a tiniest bit of a reversal into settlement, but not meaningful enough. I find the natural gas fade into settlement is not as prominent as it is in heating oil and RBOB. So it's not my favorite. If I didn't manage to find a trade earlier in the day in the natural gas, I would probably stay out. I mean, maybe you can, like, if you're the type of trader to like grab 10, 20 ticks, maybe, but I'm not. So I will only do range trades if nothing else is on the cards. Jeremiah is asking, are Asia and New York the best sessions? For metals, certainly. Yes, so if you're trading gold, your best bet is either Tokyo or COMEX. So whichever one is better for your time zone and your sleep patterns, you know, pick one. I wouldn't mix and match because, you know, trying to trade Asia and New York, unless you're like somewhere in Australasia, ooh, that gets a bit hard. And even New York session is like the middle of the night over there. But I think South Africa is, what are you guys, 3 hours ahead of Central Europe time? Do I have that correct? And you have another question. As a newborn trader, I love the way you put that. As I mentioned a few days back, I like gold, but you did mention that historically it moves slowly during London. Is it a good asset to trade as a beginner? Yeah, it's a great asset to trade as a beginner because it trends, right? You don't want to grapple with products that are, you know, that go through multiple weeks and months of slowness. Like, for example, copper, you have to be very selective with the time of the year when you're trading it. And if you're a beginner, you don't have that experience yet, you want something that moves, right? Not crazily. So you want something that moves, but it's not bonkers. I actually am of the opinion that a lot of these people trading NQ and they've just started, I think their emotional regulation is not yet developed enough. And it has nothing to do with age. It has to do with the amount of time you spend trading and getting to know yourself, what you like, what you don't like, what irks you as a trader, and what doesn't irk you. So maybe we can talk about psychology a little bit more here, purely because I think it's a neglected area of success. You know, your emotions and how you feel in a trade, whether you're relaxed or not, that is a part of your system. It's not, you know, oh yeah, it's a level. It's not a level. You give the same level to 100 different people, you'll get 100 different results. So obviously there's something else going on there. And it's literally how you feel in a trade. Can you emotionally manage yourself correctly without like losing the plot and panicking all the time? And I think the price action is some products like NASDAQ. It irks people because you're like, I'm right. I was right on the direction. It just whipped me out because it decided to wick over the VWAP by 1,000,000 points before it came back. So, and then it carries on into a trend. So, you know, I can see why NQ is more conducive to scalpers because it is a hit and run kind of product. Like, oh, you got some cash, just get out. But I personally don't like that. Many of us who have been trading for many years, you know, coming up to almost 20 years of doing this, right? And I just don't like feeling stressed in a trade. I want to be relaxed. And gold is actually kind of in the middle. It moves well. Yes, it can be a little bit nuts sometimes, but for the most part, it's actually you know, a very nicely trending product. So yeah. Actually, I'm looking at gold here, so let's leave natural gas for another day because I see that GEX2 is actually reversing here. All right, I'm going to go into a micro here because we're so far against the trend, and I was looking at GEX2 to create some kind of a reversal. I'm also going to go down to a 15-minute chart to see how we end the next 15-minute time frame. And if there's no meaningful buying wick, as we're rejecting the GEX2 area, which was at 40.60, and trying to go below COMEX value low, unfortunately, this is a short signal. So I'm a systematic trader when it comes to that, where I completely put my biases to one side and I just try and trade what's in front of me. So if this candle ends up closing as a very good Maribozu evening star formation. This is where some candlestick patterns can come in handy. I would want to see people plowing into the short side on time and sales. So that's the order flow component. And I will use the main chart to actually look at what is going on, not the micro. However, if we end this candle with buying wick, no go. No go. Why? Because buyers are still around. Anytime you get a buying wick in an uptrend, it's a passive buyer thing, right? They're still there. They're still like waiting to make everybody as miserable as possible. So let me just mute myself because I've just figured out where the sound is coming from. Yeah. Trade for CJ. Okay, so you kind of agree with me. Here you go. Short gold here for me, based on my system that loves to always take possible lower high structure. Yeah. So yeah, I'm on kind of the same page now that I've seen how the price is acting, but I'm still not convinced that some buyers are not still gonna just take it higher. So I want unequivocal reversal on a relevant time frame period that holds into that time frame period. Otherwise, it's still an uptrend and whatever we see here, but I have to be systematic from that point of view. When it comes to my entries, there's a lot of discretion there because I'm not a robot. The only time I don't have discretion is when I'm running my bots. Now, just a little heads up, because I spent like the last sort of couple of months working on the bots. Turns out that live accounts are not enabled for the API keys that they're giving us, so won't be able to run them on the live. So yeah, that's interesting. Yeah, I don't know what that's all about. So yeah, so yeah, obviously as a live trader I can't have an XFA. So, but if you have an XFA and you want to do bots, knock yourself out. However, that is not what's going to happen at this point. Would you trade gold in Asia the same? Because you would not have the same level. No, but the way I work off of time of day. So that's a huge part of what I do. And I have this observation and a statistical relevance of how price behaves at the next session open. And if it's an active session for that product, it usually does this like stop run from the previous session lows on gold specifically, and then it reverses. And then it keeps going into a trend. So that's usually how I approach Asia. I basically might have different levels, but don't forget that my levels are all market generated, right? They're not always just like, oh, it's COMEX value low and high. Tokyo has its own value low and high, right? So you can use the sentiment from there if that's your main session. You don't have to stare at COMEX. The only reason why I do is because that is I trade usually from my 12 till 4 p.m. for gold. And that is basically 2 hours before the market opens, or like 90 minutes before the market opens, which is already LME, London Metal Exchange is already trading. It's one of the last open outcry pits in the world, still open, still trading. And their hours are from, I'm going to quote UK times here, from 11:40 a.m. all the way up to 5 p.m. UK. So that's like the prime time to trade copper, gold, platinum, and if we could, aluminium, tin, you know, just nickel, a whole bunch of weird metals. And the way they do it in 5-minute increments. So it's called ring trading because there is this ring every 5 minutes, and then the metal changes. So it's like literally 5-minute increments trading. It's a really bizarre sort of situation, but endlessly interesting. And they all sit in a circle. Nobody's standing. It's not like the old pits or like the the S&P pit in Chicago where they're all like shoving each other and like, it's not like that. It's very English, you know. They all sit in a circle. And if they want to do an order, they have the signals, but you have to be sat down. And then the only people that can run around are the brokers taking orders, right? Still very much a thing, still very much the biggest exchange in pricing of the market, right? Of let's say price of copper, price of platinum, price of gold. It is still considered a super important part of gold prices. So that's why I look at that, and that's why I'm like, oh, let's look at COMEX, because it's like the next biggest exchange and it's going to overlap with LME anyway. But sometimes I do use the LME range. Like, for example, if I want to do an early trade and I see a setup where maybe we kind of smash below the Asia low and I get a very nice setup there from a liquidity grab, maybe we're hitting VWAP and we do something similar, and then I run my trade for hours almost to the end of the LME market. Almost to the end, right? I say almost because we have the London close that happens like literally like 30 minutes before then, and also the Eurex closes in around that. So you can have this wobble, you can have a pullback. And actually, if I've not really been sat at my computer or I was busy with other things, I actually like to do the scalp as a part of the Euro close wobble. That would be sometimes the only trade I do on the day, because I'm like, well, I'm busy with other things, and you know. Cedric is asking me, Dee, on a live account with Topstep, is it possible to ask payouts also when you're below the starting balance? Yeah, as long as it's not more than 50% of what's already in there. In fact, what we've seen a lot of the times is that because of the daily loss limit that they give you in the live, everybody struggles in the beginning. Like, you know, it's not an easy transition at all. You know, you're kind of used to being in the XFA and managing your money without constraints. You know, you can manage the full account balance, and then you get into the live. And of course, the risk team doesn't want you to lose it all in a single day. So they will allow you to have, you know, anywhere from 3K up to whatever the milestone is. So for example, on my live, I do currently have the possibility to lose 4.5K in a day. Should I? No. It's a crazy amount of cash to lose on the day. But they do take in the performance, they take in the overall payouts, and then they decide what you should have. But let's say that you get into live with 20K, just like a, you know, hypothetical. Then you get yourself into drawdown. So you're like now staring at, you know, you really messed it up, let's say, and you're staring at the last 5K. You can take 2.5 grand from that, and then maybe you can go down to micros and build it back up. I've seen that happen many times to people, right? Where they get into live, they don't do particularly well, whether it's stress, whether it's extra daily loss limit, whether it's just, you know, higher stakes. Now it's the live account. You can't even get a new XFA or anything. You know, it's a big deal psychologically. And then people get themselves into issues. But it's your money ultimately, right? And if you get yourself, let's say you have another situation where you get in with 20 grand, you run it up to 40K, but then the market conditions change and something, you know, something happens. So you then are sitting at the 30 days of over 150. So you're now eligible for daily payouts. That is like the biggest plus being in the live account, that whenever you have a bigger day, you can actually take that money if you've gone over the 30 days of 150. So you have to, and not consecutive. So, you know, you can be in the, I tend to be in the live accounts for very long periods of time. And it's by far the biggest plus of being in the live, the daily payouts. You don't, like once you're over those 30 days and you're in the live, you can take daily payouts. It's amazing. But at the same time, let's say you get up to 40K, then you get 50% out. So now you're sitting with 20K, but in the meantime, you run up to 30 grand. You run up to the 30 days of payout. So you have plus 150, 30 days, non-consecutive. So now you get yourself into a drawdown. So you drew down some money, you know, got a payout, well done, but you run into a bad period. Happens to everybody. It's a cycle. Nobody is ever up and up, right? Everybody's like, oh, I'm doing well, and then I'm not doing well. Oh, I'm doing well, then I'm not doing well. It's completely normal, right? We need to normalize that and not freak out and over dramatize the drawdown periods, because everybody has them. But once you're in a drawdown period, you really need to kind of lock it down. So let's say you decide to size down and it's still not working. You're still bleeding money, but just at a slower rate. So now you're down to 10K. Can you now get a payout? Like, let's say you had a very good day, one day, and you're like, wow, okay, I've just made $2,000. That's amazing. Let me get that out. You're absolutely allowed to do that. Absolutely. It is your money, right? So they're not, like, once you've proven that you can make bank, you can withdraw money. And similarly, even if you are in a drawdown and you don't have the 30 days of over 150, but there's still account balance in there, as long as it's not 50% over that account balance, you can still get a payout. And that's actually a good practice to have, because it reminds you that it's real money, right? You get yourself into drawdown, you're now staring at 10K drawdown, and you're like, you know what, let me just get $1,000 out just to like remind myself there's not just numbers on the screen. Very good practice to have. So yes, there's a lot of positives and other things. Tekka, no, that's not right. No, you can't. It says you can't take money out below starting balance. That's not true at all, and I know that because I've done it. Okay, I've done it. I went into this live account that I've got now with 20 grand, and at one point I did go down to 13K, so below starting balance. I ran into a bit of drawdown, and then I took out 2 grand below starting balance. So you're not right there. It is possible to do it, as long as it's not over 50% of whatever is left in there. They do not lock that capital for you not to take it. Otherwise, nobody would ever get any cash. It doesn't make sense. But I've done it, and I know that you can definitely 100% do payouts below the starting balance, as long as you have, in the beginning, 5 days of over 150. But if you still don't have over 30 days of that, you don't get daily payouts. That's the difference. However, it's still your money. They're not going to just keep it in there and go, this is ours. It's your money, right? So same rules as the XFA until you hit 30 days. And in the live account, starting balance is just a starting balance. But you can take out the money once you've generated 5 days. You can't do it on day one, because here's what happens. Let's say that you have 50K in the XFA, and you get the email. You're being transferred to live. At the transfer point, you can take out 50%. But once you're in there and you haven't traded the live account at all, you can't take money out, because it's effectively a new account. So you now have to have 5 days of over 150 before you can take out the money. Does that make more sense? I get now where the confusion is coming from. Yes, you can't take out the money, like let's say they put it in the live, because they already give you a chance to take some money out. And it doesn't have to be 50%. It could be like 10%. It could be 20%. You're being transferred to live. How much payout do you want? That's how it works. And then you email them back and you go, actually, I want the full amount in there. Or actually, you know what? I will take half of it out and then chuck the other half in the live. And then from the starting balance in that new live account, you have to build up at the minimum 5 days of over 150. Then you can take out the money. So whether you're over the starting balance or under, it doesn't matter. So let's say you spend 2 weeks, 5 days with drawdowns, other 5 days were over 150, but you're below that technically starting balance. You can take money out. Topstep is not complicated with the rules, guys. They only have a couple. 5 days of over 150. And in the live, when you reach 30 days of over 150, non-consecutive, you get the access to all of your cash. As easy as that, right? The end. There's no consistency rules. There's no this, no that, no number of days, no. You have to stay at profit target times 30 times this time, and then, some weird rules. Very straightforward. They're probably the most straightforward firm out there. Maybe there's one other, but generally Topstep, when it comes to payout rules, it's just there's no better. Seriously, no drama, no nothing. Very simple. Yeah, if you're, Donald says, if you're on the old dashboard, you still have to have 5 days of over 200. Yeah, I know that. But most people will be moved. So yeah. Yeah, Cedric says, thanks a lot. I was really surprised when I compared it to another prop firm where it was impossible. Like I built twice times my balance. Crazy. Yeah. Yeah, exactly. They don't want that. The Topstep doesn't have that issue. They're just 5 days of over 150 or in the old dashboard over 200. And then you've got your payout. Like super, super simple. Yeah, so there is no, all right, so this buying wick, it's a no-go yet. So yeah, they're consolidating, but now since they are taking their time, I'm actually going to go to a 30-minute time frame and wait for an even larger time frame because we're trying to do a counter trend here. I'm trying to do a counter trend, and I'm like, because of the daily developments and all-time highs, it's making me uncomfortable. Obviously, this is why I'm going to go into a micro if I do a trade at all, but I don't want to mess around with small time frames. So I want to make sure that my trade is in line with a higher sentiment. And right now, whilst my intraday is saying short, I don't want to do a trade short from a 5-minute chart because that can change in a flash. So let's wait to see how the next 30-minute time frame will end. And if that doesn't look like a Maribozu candle either, I will not be shorting this. So what do I want to see? I want to see a bearish engulfing, basically a 2-bar reversal here, unequivocally closing below the low of the previous candle with no buying wicks. If there is a buying wick, I'm going to stay out. So this is where the selectivity comes in. What platform is this? Can you show ZAO USD? No, because we don't do CFDs here. I don't care for it. These are futures, actual gold futures. Stick away from CFDs. They're partially regulated products where everybody does whatever they want to do with spreads, with specs. Spreads in particular are really quite disgusting on CFDs. Like, it's horrible. In the futures markets, for most products that are quite liquid and have prices on the dome at every price point, you enter a price, that is what you get. But then you pay a round trip fee. It's a commission, right? Whereas on CFD platforms, you get the spread, which is sometimes 5 to 7 ticks. So that means scalping, forget about it. Forget about scalping. Why? Because you have to cover the spread. Like, you enter, let's say, at 458, and it's a short, and suddenly you have the price down at like 57.5. That's your entry. And you're like, what? So then you have to cover the initial spread, and you close it, and you look at your balance, and they also charged you for the commission. Like, so not only do you want spread, you also want commissions? It's like, what? And not to mention that the spreads change everywhere. You know, one company will have 7 ticks or pips. The other company is going to have 12. Then another one will have more favorable of 3. Like, why do you do that to yourself? Why? So no, we're not going to be doing ZAO USD. We're not doing spot markets. We're doing futures markets. And if you're in the States, I'm not even sure that ZAO USD is a forex pair. I think it falls under CFD, and in that regard, according to the Dodd-Frank legislation, American citizens are not allowed to trade CFDs. So be very careful. And I actually agree with that for a change, because I stay away. I stay away from it. Eddie says, really like that you're not scalping. I've tried so many times and every time failed. It's like a rat race. Yeah, I like more than 15 to 30 minutes in 1 hour, more time, not so hectic. Absolutely, yeah, I'm a pretty chill person. You know, I don't, like maybe when I was younger, I was a lot more, you know, yeah, let's go get it, work. But, you know, I'm almost 45 and I'm like, let's just chill. Let's do like less trading for more money, less stress, more ticks. And to me, it's actually a big flex to do a small sized trade and to get a ton of ticks. To me, that's the goal. And you know, I get a lot of trolls here, right? So you've probably seen it. No, gee, never trade. I've never seen you trade. Oh, dear. And it's like, I don't trade for the sake of trolls. I trade when my setups appear. And when that is, you know, it's when the market decides. Not when a troll wants to see me click a button. So, you know. All right, let's have a look. Yeah, the spread also changes depending on the time of day. Absolutely, yeah. Like anybody mentions CFDs, and I want to have a sick bucket immediately. Yeah, not yelling at caps. Your account is under 50K. So I have a live account that was 3 XFAs. And those were all 150Ks, but because of the consistency and because I basically, so I had one live account with Drew Cash, obviously with the risk team and everything involved, and then I started back on the XFAs. They don't like you doing that, but we were kind of buying a house and stuff, and I was in that other live account for over a year anyway, so it's like, yeah, whatever. And then I went back into the XFA stage, was it March this year? And in the space from like 40 business days, I took out a 15K payout and still had, I think, just over like 20K balance in there. And literally after 40 days, I get an email that I'm being moved to live again. So did not spend in the XFAs long enough. I really was like being completely honest here. I was hoping they're going to let me build a balance to at least like 75K before I got transferred, but it was not to be. So my own consistency killed me. And I'm back in the live. I wasn't super happy about that. I was like, okay, I get it, but now I've got a 3K daily loss limit that I have to deal with. Yeah. NYMEX Crude Oil and NYMEX NY Harbor Gas are close to rolling over. Yeah, well, not yet. Usually the energies markets roll around the 16th, 17th. So I reckon we still have a few more days of good price action. But then as soon as we get to like maybe 3 days before the rollover, yeah, it all gets very sketchy. And then it's like, that's when I stay away from it. So really for 3 weeks of the month, you have good price action in the markets that roll over. All right, so 30 minutes has been and gone. We have a doji. So now I need to wait for another 30 minutes before I can see whether there is a short here. If it's still another doji or it goes higher, still no trade. But at this point, for a very dangerous counter trend that has rejected GACS too, and that is flirting with the COMEX value low area, to me, this is just a slight bearish thing. I would not buy it here. Let's put it that way. Am I selling it here only and only if we get a committed reversal that has no buy wicks on a 30-minute time frame? So I'm not on the 5-minute, not on the 15-minute. I'm on the 30-minute. Super selective on the counter trend that is potentially juicy because we got a lot of room down there, and my mean reversion brain is going nice. Yeah, I need to park that part of my brain and go, D, it's a strong uptrend. Yesterday we made another all-time high. Yes, we had a selling wick, but it wasn't that very big, so be very careful what you do. This is what I do inside my own head. And don't just jump into a counter trend. Don't be crazy. Wait for the right signals. Can you transfer money from an XFA to a different live account? No. And from what I've seen, I think they have the same live account numbers per person. So it's not going to be like a brand new account or whatever. Like my one was always 2116. So, yeah. But let me just make sure I understand your question. So we're talking just Topstep, right? Not you transferring it from a demo to like a completely different company, because that's definitely not happening. But yeah, let's say you blew up one live account or you withdrew the previous one, and then you have a new XFA, and now you're being called up to live yet again. It's probably still going to have the same number. So it's technically not going to be a different live account, but you know, on paper, yeah, it's going to have different data points and stuff. Do I trade one contract on GC? It really depends. It really depends on the setup. It depends on the size of the stop loss, the time of day. You know, sometimes I will do 1 micro, sometimes I will do 3 minis. It really depends. Like for now, for this one, I would never trade a 1 mini because it's a counter trend trade. So at most, what I'm like, it's a combine here, so it's a little bit different because I can be more aggressive with positioning. But if I was looking at this for my live account, I would be in with like maximum 3 micros here just to remove that risk. And then, you know, just grab 160, 200 ticks out of it if it works out. And if it doesn't work out, it's then just a small paper cut that doesn't really make a massive dent in the account that's going to make you go crazy and go all like butterflies in your stomach and trying to be afraid and everything. That's not a good way to be. So emotional regulation comes first, and your position sizes need to reflect your emotional state. If you're fearful in a position, you're trading with too much size. There is no other explanation. If you also cannot walk away from your desk and you enter a position and you're like locked in, sort of like, that also means you're trading with too much size. There's no doubt about that. So you need to be comfortable and relaxed in a position. Trading is uncomfortable in general, but there's a huge difference when you're like full porting it with like, you know, 15 NQs and you're like looking to get like 10 points out of it, and you're like, you know, hold at the edge of your seat with white knuckles and actually managing your position and risk correctly, and just going, okay, I'm going to go grab a coffee now. And you just get up, your heart is not pounding, you're not in tunnel vision, you know. That means you can manage the trade correctly and not out of fear and survival instinct. And it's so silly because there's no death threat here. There's just maybe threat to your self-esteem and ego. That's a threat. But you're not actually going to die if a position is not doesn't work out. It's complete nonsense, you know. Like your body thinks it's the same thing. So it's like a lion is chasing me, or I'm about to lose my XFA. There's no difference. That's how your primal brain works. But it's very different, right? One is just a bit of money lost. And yes, sometimes quite a lot of money lost, but you're not going to die from it. What is the survival instinct doing here? Like, why is it kicking up? Because it thinks it's the same thing. You don't have conscious control of it, but once you start being aware of it, you realize how ridiculous it is. And it's also ridiculous to connect your self-esteem with like some combine or an XFA or any trading account for that matter, you know, especially if it's just like 1 day's worth. If you've been sucking for like 3 months and you were doing pretty well before, then you need to wonder whether your strategy is appropriate, but you still shouldn't be afraid. You should be looking at it from a critical eye point of view and just going, what am I doing wrong that I wasn't doing when I was doing well? Is it the size? And then you go through a checklist. Like, did I increase the size? Is that why I'm not doing well? Maybe I'm not, like, what kind of tick number am I taking out now that I've sized up? Is it still the same ticks? Because, you know, some people trade with like 1 mini and then suddenly they start taking these like negative R trades because it's like, oh wow, it's $1,000. I'm going to take it. And it's like, yeah, but you've only taken like barely five points out of the product. Whereas when you were trading micros, you were taking 100 points. So that's not the same strategy, right? It drastically changes the outcome of whatever you're doing. Suddenly you're scalping. Because why? Because 5 points now is $1,000. Whereas it was like, 100 when you were trading one micro. So then you held your trades longer. Those kind of things are what you need to start wondering about when you are doing well, then not doing well. It's like, what changed? Is it the market or is it me? And 9 times out of 10 is going to be us, unfortunately. Sometimes it's the market. Look, sometimes it is the market. But it's usually the more experienced traders who are running into market conditions that are suddenly not favorable for what they were doing. And generally, we can kind of adjust. Sometimes it even takes a while for us. We do see people who get into drawdowns and are not able to get themselves out of it for like 6 months, a year. I actually had a friend who had a new baby, and he was like super profitable for 7 years. And then he decided to start working from home a lot. He had the first losing year that year. So a beautiful thing for him, new child, like lovely baby and everything, family life, idyllic. But it was a bit more chaotic for him. He wasn't sleeping, the baby wasn't sleeping through the night, and it started affecting him. And he, the markets didn't change, his environment changed, and he wasn't able to navigate things as well. So he had a losing year. It's just how, things happen. CL November contract has around 100K less volume than December contract, and the RBOB November contract has around 10K more than December. Yeah, but until the actual rollover date, they very rarely roll it. Very rarely. Like no platform will roll that early because they want to make sure that we are coming up to the date of the rollover, and they usually roll around the 16th or 17th, like just traditionally, me looking at energy markets for 12 years. Well, so far, the reversal is not really looking that great yet. A lot of buyers still here, guys. Look at that. Every time somebody sells it to the nearest low, there's like run, like everybody's just plowing in with more longs. So yeah, I'm gonna wait for at least another half hour. And again, looking for the same thing. Maribozu candle to be finished, dusted, printed, cannot be changed after this 30 minutes. And if it's still a buying wick, and if we're still not sitting below 40.54, then that's not a good reversal signal. But if it is, then I might plow in, because it's a combined 5 micros. So no minis. It's a counter trend trade. And then if it's a true unwinding, the size of the unwinding move is going to account for the fact that I'm in a smaller position size, because you're going to get more ticks. Because I'm very good at staying in on trending moves. I'm not somebody who freaks out when I'm X amount in profit. Because again, I've got a situational awareness that serves me really well on those days. And I will try and milk it for as many ticks as possible. Sometimes if it's a trending move in copper for the entire day post CPI, I will actually hold the trade for like, I think one time I held it for like 9 hours or something crazy. And it was like, I think I got like 460 ticks out of it, but it went to 600. So even when I exited, because it was like, post settlement, and I'm like, well, how much can this possibly move? And I wanted to go do other things. So I stayed in it from, I think it was like 10 a.m. my time until like 7:30 p.m. in the evening. It was crazy. I normally hold them for about 2-3 hours. That's like, normal for me. But yeah. So here's the thing. What is the crime? I don't know where you're getting that data because I'll show you on the CME side. If you go on quotes, and if you actually look at the actual traded volume intraday, November is still bigger, mate. Unfortunately, this is RBOB, or Robert. And no, Coach Robert, not you, although we do love you. So yeah, November, 3,620 contracts. December, 3,063. So we're still in November. Let's have a look at CL. Someday I'll learn how to find this. Let's see. Crude oil futures, there we go. Okay, go to quotes. What is the front month? November, 39,615. December, 27,370. So still bigger volume in November. What are you looking at? Be careful, when you're looking at things, because, the CME largely has everything you need. It's not, yeah, but I've just gone on to the CME website. So what were you looking at? We need to look at the intraday volume. That is what you're looking for, not like the overall volume that was traded over the last month. So the quotes in the volume column, that's what you're looking at. As long as the current month has more volume traded, it still remains the front month until the rollover date. So, yeah. I don't think regular people can post links. Only those of us who are moderators can post links. So we won't be able to see that. Sorry. Ticks versus time charts. I use both, to be honest. And in fact, I don't like tick charts. I like range bars and Renko, personally. But even that, I will combine with a time-based chart because I've started off on the time-based chart. I know what I'm looking at on the time-based chart. However, if I'm looking for a move to kind of get going, you can see that best on either range or tick charts because it just shows you when the move is actually on the way. In fact, range bars show that really well. And I always have one of the platforms that show me that. So for example, maybe we can do, I think there are Renko charts somewhere on here. Yeah. So here's Renko. Now the problem that I have with this Renko is that it doesn't have the wicks. I prefer the Renkos with wicks. And this doesn't have it. But with the range charts, this is a Renko. Obviously every bar is the same. It is good for trending moves, but it is absolutely terrible when you're like trying to decide the actual time of day when you're supposed to be going in. So for me, regular candles. And then sometimes if I'm in a trending move, I will also look at Heiken Ashi or Heiken Ashi, however you say it. Because it smooths out, like especially if I'm like doing once in the 3-month NQ chart, usually for power hour, then I don't like to stare at NQ on like regular time frames. So yeah. Yeah, so what is the crime? The way you look at, once again, the way you look at the front month is you go to the actual quotes section, then you see intraday, how much are we trading now, and which one is bigger. Once that changes, the platforms will start rolling. For now, we're still in November for both of those. So I don't know exactly how you read it, but that's how we've always looked at contracts and whether we should roll or not. And back in the day, most of the platforms did not roll automatically, so you had to do it yourself. Shock horror. Yeah, so he uses that for ES and NQ, but he will also use the page that I showed you so he looks at open interest. That's a slightly different thing. But we want to look at the quotes section for the volume column, right? And also, ES and NQ only roll, what, 3-4 times a year? So you don't even have to look at them. But he likes to look at the open interest as well as the front month. He doesn't really obsess much, oh, what is the front month? What is the front month in ES? Because it only happens, you know, a few times a year. So, yeah. Heiken Ashi candles. Heiken Ashi candles. Heiken Ashi. I don't know whether I'm pronouncing it correctly. I'm not familiar with Asian languages. My niece is, but I'm not, so I have no idea. And if it's not how you pronounce it, I'm willing to learn. But basically what it does, it smooths out the movement. However, what I don't like about this is that it also smooths out volume, and I don't want that. I want actual volume. So yeah. All right, it does not look like I'm going to get that Mariposa candle, so no go on the shorts yet, even though we are trying to decide, right? So GEX2 gave a partial sell-off, but the follow-through is just not there. So I reckon this is still pretty strong. In that respect, I would be looking for a pullback, either somewhere to the demand area. I don't know whether we are, whether we are committed enough to get all the way down to the Asia low. It would be nice if we did. And the most ideal situation here is that we wick down to the ADR, then back into Asia range, and then to kind of rotate. But just looking at how strong this bloody thing is, I reckon the best bet is just to keep track of VWAP, see whether we can, maybe wick through it a little bit around the post-NY cut, so from my 3 p.m. all the way up to 4:30 p.m. So literally that time period, 90 minutes into COMEX, and then 90 minutes in the run-up to the euro close. That's where I would be looking for pullback and then a continuation longs, because we're just not getting the committed reversal and the closes of the next candle below the previous structure. That is literally what it is. So it's not like, oh, Dee's looking for a 3-bar reversal. No, I'm looking for a break of the structure to the downside that has confidence in it, commitment into it. And when that doesn't happen, I can't run a counter trend trade. It's lunacy. It's like, yeah, we're underneath the value low, just about. But, yeah, I mean, look at this thing. One of my VIPs correctly stated, looks like a meme coin at this point. And I said, yeah, forget the sell button. It's crazy. Like all-time highs every single day. It's looking like NASDAQ at this point. Like this is a commodity, a precious commodity. And this is not new either. Like we've been doing this for a while. Okay, had a bit of a breather for the summertime, but then also go back in time. From December last year, it was just like up and up. And then, they started slow. And then they're like, actually, let's just, are we going to Mars or Moon? I don't know. But it's absolutely unbelievable. But at the same time, I don't want to fight that. I will only fight the trend if I unequivocally get the change in sentiment intraday and I stop getting these passive buyers that keep stepping in. Every single red candle that you see, this is also another sign. Just look at it. Like most of the red candles, they all have wicks to the upside. So every time somebody sells it, they buy it up. Every time somebody tries to sell it, they buy it up. Sell it, buy it up. And then promptly it's followed by a reversal and it just carries on. So until that ends, I do not want to mess around with shorts unless I'm like completely sure that all of the different data points that I get from different concepts, options chain, distribution curves, some sort of a reversal on the daily and weekly charts. We don't want to fight this, okay? So no trade for me because there is no setup here, unfortunately. Trolls be trolling, but I'm not going to trade if the setup is super strong. Do I want to buy it here? I do not. I want to buy it lower. I want to buy it either at VWAP or ideally closer to this demand area that we created earlier. I think I remain bearish on the energies though. So permanent bear RD. As we get closer to the NYMEX session, so I'm just going to change the chart here. We have a slightly different situation today because the NYMEX value high for RBOB is literally right around the current price at 91.42. If we are accepting value, so if we open up slightly above it but not too far, and then we accept value by closing one of the 30-minute time frames inside it, I would also be looking for a weakness around VWAP and then going short for a rotation and maybe even a full smash back down into support, which is down here. But then if we look at slightly bigger time frames, we actually have a bigger support from yesterday around 187. Settlement is around this area, so there is a possibility that maybe today we could go into a bit of an uptrend. Didn't really see what the inventories did yesterday, and what tends to happen on Thursdays is that if a trend of any sort appears on either RBOB or crude oil, don't fight it on Thursdays, because Thursdays have these like bi-weekly option expiries that were introduced last year in July. Actually very, very new, but they do tend to bring more trend days on Thursdays in energies. So just keep that in mind. And also don't forget, if you're going to get involved in natural gas, we have the inventories report. And I think it's exactly the same time as crude oil, usually on Wednesdays. But today is a day for natural gas. So if you want to do anything with it, maybe try not trading directly into the inventories on natural gas. Otherwise, it should be pretty interesting day. But still, we're not going to have the NFP, do we? Donald Key says CL is moving. Yeah, but I'm not interested in it right now. Do we have NFP? Did we open up the government? Like, what is going on? Are they back to work? I don't think so. Let's have a look at the calendar. Whoops, my light went out. Okay. Now we have natural light. Let's see. Are we going to have NFP? Actually, I have another light somewhere here. Let me see. Where is it? Where is it? There it is. Okay. There we go. I've come prepared for the last few minutes. Don't fall. All right. Still shut down. Okay. Yeah. So no NFP tomorrow. Business as usual, right? Technicals. Yeah. So yeah, just see what's going on technically. Don't fight the trend, because at the moment there is no reason to. And yeah, let's not F up the Friday. Yeah. So that's another thing. If you've had profits for the week, either lock it down to like 150 daily loss limit. What's going on with my lights? It's like, oh, at the end. At the end. Yeah, so lock down your daily loss limit to like 150, or don't trade. That's always an option. That's all from me. I'm going to wish you a great weekend, but you will see me on the all-female reversal challenge tomorrow evening, my time, when I'm back in England in my usual office. Until then, like I said, trade safe and have a great day. This was the Eurotrade. I'm Marcus Stalker D. I will see you very soon. Take care.